Hi everybody, and welcome back to FANG Friday. This is Ross Healy, the Chairman of Strategic Analysis Corporation and a Senior Portfolio Manager at McNichol & Associates Asset Management. If I were to put a title on each of my YouTube videos, I might call this one the Facebook edition. I have lots to say today. So, the world may be changing for the social media companies. In Israel, there are proposed measures that include having the social media giants become liable for incitement or libel posted on their platforms. This would be unprecedented in the worldwide free world, according to the report. Of course, countries like China and Myanmar are already there, but that's another story altogether. Now, Facebook and the other social media sites are currently not legally liable for untrue or harmful content that appears on their platforms, unlike newspapers and other traditional publishers. If this catches on, however, this may well affect these so far unresponsible social media companies. Interestingly, one of my managed clients ordered me to immediately sell any Facebook shares that he owned. I assured him that we did not own the stock anywhere. But I am wondering to what degree this attitude will prevail and its effect on the Facebook stock in the intermediate term. However, before we take a closer look at the FANGs, as always, I do like to say thanks to everyone who likes this video and all our subscribers. Okay, turning to the FANGs now. Not much that I need to say about Amazon. It's holding nicely at its HB2 price, which is 12 times book value. And as I've told you a number of times and showed you, that is a 10-year valuation low for the company. So I'm expecting that that is going to hold. If it does not hold, another story altogether, but that's a story for another day. Netflix, after trying for some time to actually break out over its HB3 price, which is 16 times book value, finally succeeded. And by the term breakout, I mean it not only break, so we have this 3% 5-day kind of rule of thumb. So not only did it break out the 3% and 5 days, but it also did what I really like to see, and that is it checked right back to the HB3 price, held beautifully. I think that this stock is likely heading now for its HB4, which is almost $750. NVIDIA, well, NVIDIA finally gave us a nice buy signal when it dropped precisely to its HB4. And as you remember, I put this in the portfolio 2 weeks ago, and the stock is now rebounding very nicely. Microsoft, there's not much I can say about Microsoft. You know, it remains in that channel between its HB2 and its HB3 price. That's 12 and 16 times its book value. And as long as it remains in there, there really is nothing that I can say in a short-term sense about the direction of the stock. We continue to hold it in our FANG portfolio. Alphabet, well, I was going to say, call this my bad. I saw the stock breaking out here, and of course we had that nice bottom in Amazon and the breakout in Netflix, and I thought, wow, this is breaking out too. Well, I needed to keep my 3% 5-day rule and the check back to the line, in mind, and I didn't, in my desire to keep holding this stock, and indeed the stock has set back now about 10%. It looks very much to me as it's rallying back, however, to its bubble price. And as long as the market is with us, and it seems to be, I think that that's where it's going to go. We'll review it then when it gets back there. Apple, well, Apple here appears to have broken down, but look at this graphic, and you'll see those little red triangles. Those are the balance sheet dates, and we're very, very close to getting a new balance sheet date. And we're going to be interested to see if the company has continued to massively buy back stocks, in which case the trend of the balance sheet, okay, may well be carrying the stock down, but only to its revised HB5, okay, which would be, I think, a reasonable target. However, that we'll have to see. Now we get to the subject of this YouTube video. And we start by a long-term, a 5-year look at Facebook, and we see that every time that this company has reached its bubble price, it has set back. Now, what is interesting, of course, is that when the stock set back in June of 2018, that was in the middle of course, of a scandal. This time, unfortunately, our whistleblower waited until after the stock had hit its bubble price and had set back a little bit before she appeared. Now, it has certainly affected the stock, as we will see, in a short-term sense, but we did not get the plunge that we did back in 2018. Since my recommendation that we simply get out of the stock, it has done almost nothing but head down, and it's off again today as well. Now let's go back to 2018 and see what we might expect. Well, of course, we had that big gap there on the announcement of the scandal. I would be willing to bet, by the way, that if that lady had appeared recently when the stock was at the bubble price, we might have seen something very, very similar to that. But look what happened subsequent to that time. Okay, it dropped a full break point, but then had a nice rally, and we may well see the same thing happening again. Okay, but it moved back again to the mid-super growth price. That's 5.5 times book value, and then broke down. Having broken down, however, the market was still, is this for real? And it kind of hooked around and then tested the breakdown point again. And that also is very common, kind of the breakdown pullback, just to test to make sure that it's for real. Now, when we take a look then at the subsequent action after that, we'll see that it did drop a full break point to its low super growth, actually just a little bit below that, on a bit of an overshoot. Tried to hold the low super growth price, failed, but of course this is the setback here at the end of 2018. When the market turned in 2018, it pulled Facebook back on side, and it has been heading up ever since to its bubble price, of course, before it peaked out. Now, in summary, there are 4 stocks in our Phantom FANG portfolio that I'm perfectly comfortable with. Amazon, Netflix, which have held their ground, and NVIDIA, which gave us a trading buy signal 2 weeks ago. Microsoft just continues to be. I suspect that that Alphabet will retrace to its own bubble price at 7.4 times book, and then we will see. And I'm crossing my fingers on Apple to see what happens when we get the next balance sheet, which should be fairly soon. You will recall that I sold Facebook in last week's YouTube video, and I will want to see what the fallout is going to be going forward before I would personally be comfortable touching the stock again. As I showed you just now, I would remind viewers that following the last scandal of this company in 2018, the shares dropped a full 2 breakpoints before finding their feet. So caution is my watchword for now. My takeaways for this week are, as far as the overall market is concerned, we did not come even close to testing the super growth price for the S&P 500 on the downside, and it looks as if, no promises, that we may have seen a shorter term low. My low super growth price target for the S&P remains intact. Second, I am not looking for Facebook to collapse ignominiously today or tomorrow, but being outed for being the most egregiously self-serving, almost ruthless of social media companies, it's not likely to help its investor following. And the regulatory changes that I suspect may well follow, are likely to affect its future profitability, or that investors may suspect it will affect its future profitability. Getting to wherever the stock is going in the intermediate term is not going to be a straight line, as we saw the last time that Facebook worked through a scandal. There will probably be many trading opportunities along the way that may lead the more optimistic to hope that things are behind the company before they actually are. I will signal those opportunities as we see them, but I will remain cautious at the same time. For now, this has been Ross Healy, the chairman of Strategic Analysis Corporation and a senior portfolio manager at McNichol & Associates, reminding you that nothing, including investing, is difficult if you have the right tools. I'll see you next week.